Hi, my name is Pete D'Amato, and I'm the data visualization developer for the Hechinger Report. In this video tutorial, we're going to dive into an important but often overlooked source of information for journalists covering the education sector, that is bonds, and the documents that school districts, municipalities, and colleges file when they want to borrow money for big projects. One main way these entities borrow is by selling bonds, called municipal bonds, to investors. Municipal bond filings, which are public, are very useful for journalists because schools and districts and other entities pack the documents with lots of details that would otherwise take a long time to research and pull together. You don't have to be a CPA to glean lots of story-worthy facts and trends from these documents. This lesson is going to focus on how to use EMMA, a searchable municipal bond database that makes it easy for you to find and examine municipal bond filings. EMMA stands for Electronic Municipal Market Access and is provided by the Municipal Securities Rulemaking Board, the principal regulator of municipal bonds. EMMA also has records relating to bonds issued by nonprofit entities, such as private universities. If you are completely new to understanding the bond market, let's get a little of the jargon out of the way first. Bonds, as you probably understand it if you were using this training, are debts issued to raise money for an entity. Municipal bonds are securities issued by states, cities, counties, and other governmental entities such as school districts. Let's first check out the search function of EMMA. EMMA allows you to search for filings by school name, district name, municipality, or state. One thing to be aware of, though, is that cities and school districts sometimes have multiple listings in EMMA with slight variations in name. Let's say that we're a reporter who wants to look up District 51 in Colorado, which encompasses Mesa County Valley. We type in Mesa 51 to get the district, and we see a couple of results that come up. We're going to ignore the first one. That one refers to a specific bond, and go to the second listing for Mesa County Valley to see what we can learn about what bonds it has issued. Just keep this in mind that if you're looking for a specific bond issue, you may have to visit each iteration of the name to find the correct bond. One of the most common bonds you'll encounter while using EMMA is the general obligation bond. All this term means is that the entity borrowing the debt intends to pay back that debt out of typical revenue streams such as property taxes. This year, District 51 issued a general obligation bond that will go to the construction of a new high school to be repaid primarily through property taxes in that district. How do we know this? Well, we're going to dive into the documents in just a second so we can find out more about how to glean this information from District 51's bonds. Before that, I just want to mention one more common bond type that you may encounter, though one that has less relevance for you as an education reporter, the revenue bond. Revenue bonds do not typically finance construction for things such as schools. Instead, they're mainly used for revenue-generating projects such as toll bridges. If you want to check one out, though, you can visit the listing for Hamden, Connecticut, and see their revenue bond, which was issued for a project called the Whitney Center Project that would go to expanding a senior center. Their investors should expect that debt to be paid back through revenue generated from the center. What is a BD Antic NTS, you may ask yourself? Well, sometimes bond types will show up in EMMA under strange names. In this case, this is a bond anticipation note, another main bond type that you'll encounter in EMMA. While the abbreviations can be a little confusing, most point to a handful of main bonds. We don't want to get too far in the weeds about the different bond types in EMMA and the aspects of bonds' taxable status and refunding status, as these are likely to be more interesting to investors, the original audience for EMMA, rather than journalists. Let's circle back to the example of District 51 and Mesa County Valley. The most interesting content for education journalists, both about the bonds and about the entity itself, is typically found under the official statement and continuing disclosure tabs for the bond issue. The official statement is the main document produced when a municipal bond gets issued. On the official statement tab on EMMA, you will find the final official statement as well as any preliminary official statements that were produced. Preliminary official statements are just a prospective document that can still be revised before the bonds are put up for initial offering. Reading the official statement for Mesa County Valley's 2022 bond is how we found out that the sale was for $95 million and that the money raised would go to a new high school. But there's always a lot more detail that we can read into. If you ever needed to read up in a hurry on the economic and demographic background of a district or town, you could do worse than checking out the official statement on its most recent bond. Common sections of an official statement include a description of the municipality, state or district, population forecasts, major employers, a list of the biggest taxpayers in the state or city and recent development projects. For reporting purposes, you can find a good detailed description of the capital project or development that the bonds will go to funding. The official statement will do a good job providing a full accounting of the financial situation, including any outstanding debt of the city, state, county, or school district. When we scroll down to the table of contents, you can see the financial operations, the property taxation data, and the debt and other financial obligations section. Once we scroll down to the debt section, you can see the long-term debt that this district currently has. Pension liabilities, a big concern for many municipalities, are also accounted for in the official statement. There you can find any data on unfunded liabilities and plans to keep the pension plans funded. The official statement also usually includes a section on legal liabilities that the entity is currently facing. While this can include specified ongoing legal matters, the section can get somewhat vague. Remember, this is a document designed to give information to potential investors. Its accounting of risk is not always full. And speaking of glossing over issues in the document, there's plenty left unaccounted for in official statements. For example, the Hutchins Center on Fiscal and Monetary Policy analyzed official statements and found that few address things such as climate change mitigation, even for entities especially exposed to extreme weather such as New Orleans and Charleston, South Carolina. It is also, unfortunately, not uncommon for municipalities to get caught making false and misleading statements in their official statements as they try to secure buyers for their bonds. Just this March, a Texas school district and its former CFO were charged after misstating figures such as outstanding construction expenses. The pressure to present rosy official statements ahead of bond sales means it would be difficult to find a municipality's dirty laundry in its bond documents, though they are good resources to refer to if reporting on these types of investigations. The other interesting set of documents is under the Continuing Disclosure tab. This is where you can find annual reports and audited financial statements released after the issuance of the bond. The Continuing Disclosure tab is important as it will reveal the financials of the entity that issued the bond. For instance, going to the Ohio State University and exploring its most recent bond issue, and checking out the Continuing Disclosure tab and the quarterly financial report for the most recent quarter will show how important financial figures have shifted over the past quarter. This quarterly report shows that enrollment in 2021 remained relatively stable to the pre-COVID numbers. Net tuition revenue, however, fell precipitously in 2021 as the university gave out more financial aid to students. If you've made it this far and want to know more about how to report on the bonds themselves, there's more information about the debt on the Final Scale tab. This lets us see all of the separate issues of each bond. Most bonds are broken out into different securities with different dates of maturity, which is when the investor would get their principal back from the bond issuer, as well as different interest rates. The coupon on a bond is simply its interest rate. In the case of the money bonds on Emma, these are annual interest rates. The term is a holdover from the days when bonds were paper certificates. Back then, bondholders had to physically clip small sections of the bond where interest rates and redemption dates were printed and then mail them to the issuer to receive the payment. It sounds almost quaint now, as interest payments are automatic at this point. The price of these bonds are expressed by the going price that they were sold at during the initial offering. That may change as the bond changes hands on the bond market. The yield differs from the coupon rate because yield takes into account the fluctuating change in the purchase price of the bond. Again, unless you want to begin reporting specifically on the bond market, you might want to skip learning these calculations right now. Emma also includes debt ratings given to each bond. Bond investors use these ratings to determine how likely the entity would be to repay the bond debt and thus how unlikely it is that the investor would lose their money buying this bond. In essence, rating just means how safe is it long-term to hold debt from this entity. Some investors will look for more or less risk, and institutional investors such as pension funds are often restricted by their bylaws to the safest, highest-rated bonds. So these ratings are important to investors, but remember, the ratings agencies are not regulators. They're third-party companies paid by the bond issuers to give their analysis. Each of the 4 agencies that Emma includes ratings for has their own scale. You can look up these scales on their respective websites, though they roughly fall on a spectrum that looks like a wonky grading scale. Each agency also has its own threshold for what it considers investment grade versus non-investment grade. If we go back to the example of Hamden, Connecticut, and look at their general obligation bond, we can see that they get different grades from Fitch and S&P. Fitch is BBB rating is actually at the bottom of the investment grade band, just one step away from non-investment grade, while S&P's rating is higher, nearing the top of the rating scale for investment grade securities. That means, according to S&P, Hamden, Connecticut is considered to have a very strong capacity to repay. In addition to giving information on a municipality's economic prospects and the projects being funded, journalists can use EMMA to report on municipalities' use of the debt market in general, a topic that deserves much more public scrutiny. From 1997 to 2017, the amount of bond debt issued in the U.S. has doubled. One of the questions that should be answered is whether, as municipalities rely more and more on public debt markets to pay for things such as school construction, are they getting a fair deal? The Hechinger Report's Sarah Buchamovich and Nicole Dobo delved into the issue of financial costs of using the bond market, finding that many municipalities funding education construction projects were locking themselves into high interest payments. One such district was Fox C6, a school district in Jefferson County, Missouri. You can view the interest and principal allegations in the most recent official statement prepared for the district. In the section under Other Obligations of the District, you can see a series of certificates issued in 2006, 2007, and 2008, which cost the district millions in interest payments. Sector watchdogs have also found that the amount municipalities are paying in fees can cut into the amount of money raised through bond sales. The Haas Institute at the University of California, Berkeley, combed through official statements on EMMA for 812 municipalities, examining how much it costs each entity to issue the relevant bond relative to how much funding was raised. It found some municipalities were putting extremely high percentages of the bond sale toward just the cost of issuing the bond. You can look for yourself at one of the districts they highlighted in their report, Dehesa in San Diego County, California. Under the Sources and Uses of Funds section of the official statement, it is shown that a $2.17 million bond issued in 2014, a reauthorization of a 2012 bond, carried an issuance cost of $183,000, and that the underwriter took a cut of $16,854. That means that, after assuming debt of almost $2.4 million, the town gave away about 8.5% immediately. There's always lots more to learn about EMMA and about the municipal bond market in general, but I hope this has been a helpful primer to you in your work.